Hey, welcome back to the Scaling Smart podcast. This is the podcast for accountants serious about growth, control of their firm, and building a practice that supports your life and not the other way around. I really like this episode we're going to talk about today. It's for every accountant or tax pro who's gone solo or is in that first few years of building your firm. And I want to help you avoid a painful and common trap, which is saying yes to the wrong clients. And we're even going to talk about saying no to people like friends and family friends, etc. And of course, this is it's a very close to home topic because if you're in the early stages, you're probably feeling like you have to say yes. I get it. Back when I started on my own, 2017, I did it too. But what I'm going to share here is from direct experience, and trust me, it's better to avoid this altogether than to have to fix things later on and, clear out your client list just to add more slots afterwards. So we're going to break this down. So here's why friends of family members often don't work out. So doing tax work for friends or like extended family who don't fit your ideal client profile rarely ends well. They want exceptions. They want in person, even though you run a virtual firm. They ask you advisory style questions just because they know you personally. They want to tap into your knowledge of real estate, your trust. How should I set up my trust? 529 plans, etc. And the thing is, those are all good things to discuss, but they want to discuss it for free. And when you set a boundary, oftentimes you're the bad guy. So you might think, well, maybe they'll refer me a better client. Still not worth it because you'll be stuck delivering tier one, top tier service to them without setting up the boundaries or getting paid. And it's like you're hoping that there'll be a better client to kind of even them out, and it just doesn't work out. So it's a bad deal every time, if you ask me. So now, how do I handle this within my firm? Now, I do work with immediate family, of course, but there are certain rules. They use systems. They'll sign an engagement letter through my CRM, even if it says $0. They have to go through the same process so that I'm doing it the same way. Like, say, for example, they want real, additional services outside of just, hey, file my quick 1040 with my W-2. Like, they're setting up a business or real estate advice, that has to be a clear line where you draw it in the sand for them. And they have to know that. So free comes with exceptions. It comes with rules, and they're my rules. So sometimes explaining this can be exhausting. So now I want to tell you why you want to address this early on and why I'm discussing it here, because clawing back that time from bad fit clients is going to take away from your ability to grow your firm. So here's what happens when you have to officially terminate a client relationship. You have to send closeout messages. You have to explain the new boundaries, set a actual cutoff for when you won't have access to the portal, access to me. You have to actually define that. Sometimes you even might want to send a termination letter. And sometimes these people will take it personally, even if you were just trying to help them get a loan the first time, get their taxes caught up, whatever it was that they came to you initially and you decided to take them in for. When you decide you're going to elevate your firm, you're going to do subscription billing, you're going to do, all these other services, you're going to help people do advisory. They're not susceptible to it. They're not going to be the right fit. So it's going to end up being way harder to let them go than how easy it was to get them in to say yes to your, easy stuff in the first place. So I built my firm with too many of these people at first, and then I had to get rid of them all. So what ends up happening is you have to, when we start out on our own, of course, we want to grow revenue. We can't say no. So we're just kind of saying yes to whatever comes across. I even had an office. People would come to the office if they called. I said, oh, somebody found me on Google from my office and they said they want to come by. So it's great. And the thing is that gets confusing there is sometimes those strangers do become great clients. So it's one of those things you got to be careful with. So when it comes to friends, relationships, colleagues sending you a referral, that could also be different too. So I don't want to mistake it where it's your friends, because some of the best clients I've got are from friends, colleagues, other accountants that say, hey, I don't do what you do, but I think this client would be good for you, because then you don't run into that situation of like, what's the worst thing that, here's one of the worst case things that that could happen that will kind of throw you off is, somebody says, hey, I have a friend, or, somebody that's close to your friend, family member says, oh, this guy said he needs some help, or this, lady needs some help. And once you actually put them through your actual system, treat them like a complete stranger, give them the regular price, fair and transparent pricing, fair and transparent scope of what you're going to do. They're going to reach back out to that friend and say, hey, he's charging me high, or he's charging me more than expected, or, I thought you were going to, I thought he was going to hook me up. And the thing is, you're doing everything with the intention of helping people out all the way. When we're talking about taxes, accounting, planning, these are, life-changing results you could get for people, but you have to get them to sign up. You have to get them to go through your process. Otherwise, it doesn't work. So, you don't want to get that call from your friend saying, oh, I sent them to you and they're saying that you're charging so much. And it's like, yeah, well, guess what? That's a discount for what I'm worth. And it depends on what they're comparing you to, what they're used to, all those different type of things. So remember, bad referrals come with bad habits. They scope creep you into advisory. They'll often have messy books. They'll have missing payroll, bad 1099 contractor pay setup. And one of the other things I want to warn you guys about is that just file an extension and we'll reconnect when you're, after busy season client, because that's how some of these will come. They'll come to you that first week or so of April when they know they got to do an extension and they haven't spoke to you all year because, hey, you're not reaching out to them because you don't, you're not even trying to get them as a client. And then they'll come to you and you're thinking, okay, well, this could be some business for the future. No, you have to let them know that you have a process, whatever time of the year they come to you. So it's kind of like you have to believe it yourself and you have to have those systems in place, because what will happen? Here's what's going to happen. I'll just give you a random scenario and you'll tell me it probably sounds too real because it's actual, So if somebody comes to you, let's say April 5th, hey, can you just file me an extension? I'll come back to you when it's less busy. And that's when they'll come to you and you'll just say, okay, I'll just, an extension takes me 10 minutes. I'll go ahead and knock out your extension. And, I'll deal with it. Yeah, I am busy this week because I'm doing extensions and I'm talking to people, telling them what they owe for April 15th, et cetera. But if your firm is like mine, we're busy year round. We're doing books year round. We're doing advisory year round. There's tax law changes happening all the time, being debated, being voted upon, being discussed. So business strategies are constantly changing. The real estate markets fluctuate locally, nationwide. So these are all different things. And, and we're also getting new clients that sometimes need to get caught up and get ahead. So that calendar thing doesn't really work for me. So when somebody comes to me on April 10th, April 5th, whatever, April 14th and says, hey, can you just do an extension for me? It's like, no, well, what are you signing up for? We could go through our sales process anytime, because, you can't come to me and say, oh, we'll just do it when it's, not busy for you. Well, the thing is, I'm not busy. I'm available to the right clients anytime. So we're not busy. We're not, we're not that type of firm. And that's how I want you guys to, address those type of situations when they come to you, because here's what's going to happen. Remember, you don't have unlimited space on your client roster. You're giving them a slot on your time, on your client roster for the year, and you don't have unlimited space. So even if you're growing, you scale through consistency and simplicity. No exceptions. You can't say, oh, well, this guy, I know him, or this lady, I know her through somebody, so we're going to do hers a little bit different. They're still going to expect top tier premium deliverables. They're going to be submitting their paperwork for loans, for mortgages, for financial aid, but they're not respecting the process that you put your other clients through. So again, don't fall for the just file the extension and we'll figure it out after busy season, because if you're like me, I go to conferences, I speak at conferences, I I have different clients that have different things going on in their business, different busy seasons where they need me, times where they don't need me. So it fluctuates. And there's times where I'm heavy on sales and I'm into the sales. And then there's times where I'm, into the working on the systems for the back office training. So it's not that, we're busy year round, and the thing is that client, the same one we're talking about, if they come to you and just say, file that extension, they're going to come to you when it's the worst possible time. And suddenly it's an emergency. I mean, I'm telling you what I know. So this is what happens. They need that loan, they need that refinance, and it could come at the worst possible time for you. And because you file that extension, now it's almost like you committed to doing something for them, even though they didn't have any of their stuff in for you. So, remember the main thing I want you to take away from this is just don't be afraid to say no. But also this means clarifying your systems and your structure, because that's going to make your firm strong. It's going to make it more powerful when you have engagement letters ready to go, whether it says $0 on it or not. If it's for a favor, if it's for a one time, if it's for an ongoing, you want to know that. You want to also know clear, what's my turnaround time? When you get me your stuff, we could probably do this in 5, 10 days, 15 days, depending on what, other services we need to do. And you also want to have your clients in different pools, tag them. So we use in our CRM, we tag people. So I could go to a tag, run a report, and these are all the friends and family that pay $0. I could see that list. And you want to make sure you're monitoring each group of client, which ones are the top tier VIP advisory clients, which ones are the, let's check in with them quarterly, which ones are the twice a year, semi-annual. So you want to create these systems and structure, because then it's going to help you, avoid those pitfalls. Hey, just a quick break from this conversation. I hope you're enjoying it. Did you know that most people listening to this podcast haven't actually subscribed yet? And if that's you, no pressure. But if you've been getting value from these episodes, take a second right now, hit that subscribe or follow button. Really helps me bring smart, tactical content to accountants like you. Second, if you're an accountant who's great at what you do, but you still feel like you're undercharging, you're overworked, overwhelmed, or stuck with the wrong clients, then I want to personally invite you to my Scaling Smart 3-day challenge. In just 3 days, I'll show you how to price your services confidently, filter out the wrong fit clients, and build a lean tech stack that helps you run your firm like a business, not a job. Check out the link in the show notes. There's also a VIP upgrade that includes live Q&A access with me during the challenge. I'd love to help you make your firm smarter, more profitable, and more sustainable. All right, let's jump back into the conversation. Just the big takeaway here is say no to the wrong people, because it gives you space to say yes to the right ones. So do you hear what I said there? It's like if I say no to you, it's actually just giving me the space to do extra work on marketing, extra work on systems, fulfilling my, backlog of work that we have to do. So that's the kind of thing that I want you to remember when you're saying no, because it's hard. Trust me, I know it's hard to say no. You want to just say, hey, let me just say yes to them now, and then maybe next year. But the thing is, next year, when you catch that breakthrough, when you have that new, niche that's starting to grow, you're going to be bogged down with time. You're not going to have the time to really attack that the way you want to, because you kind of committed to, these people. And trust me, it is a job in itself. It's an engagement, it's task that you have to do when you're offloading them. So be careful who you onboard into your systems, because firing the clients and firing people, and I just say this because, from experience, you offer your help, you do an engagement because they come to you as a referral or friend or family, however they come to you, and you say, yeah, you know what, I could spend a couple hours on this and I could get it done for you. I mean, I could almost do that for free, depending on the relationship or whatever it is that you're, because we're literally giving our time in some certain cases where we're charging for that, and we got to get away from that. So, you have to let people know, and don't be afraid to let people know that you only help that's outside of my wheelhouse. So that's something that I like to tell people, because it's like, hey, well, for example, and I have a client that's a brain surgeon. You could be a brain surgeon, and of course you're a doctor. Somebody could come to you with a wound and they say, oh, I have this, bruise on my arm and it's got, is it infected? And remember, a brain surgeon is very specialized in what they do. Sure, they could tap into, they went to medical school, so they could probably tap into some knowledge they have on, how to patch up that wound, but that's not really with what they do. That's not in their wheelhouse. They might even want to recommend you to a wound specialist. So that's why, for example, when I run into, and this is the case that often happens, you will meet a client. Now with my firm, we try to find out initially on the first call, on the first engagement, what are we signing this client up for ongoing? Because I'm trying to, like I said, I'm building a roster. I'm not just doing transactions. We're catching up your books. We're doing the tax prep. We want to know, what are you signing up for ongoing? What level of advisory, what level of ongoing support are you signing up for, so that we know how to help you going forward. Now, oftentimes when people come to you and they're behind a few years on their taxes, maybe just 1 year, they say, well, I just want to get this caught up. And then we'll think about that other stuff, the future planning, all that other good stuff that you mentioned. We'll talk about that later. And you have to be able to say, no, we have to talk about that now, because I won't go back a year or two and fix whatever back issues you have unless I know what kind of client you're going to be moving forward. And you have to set that boundary. So, don't be afraid to say no. Make sure you're getting the right clients on your roster, and, make sure that you recognize that you don't have unlimited resources, even though it's, for us, sometimes it could be literally just 30 minutes and say, hey, I'm doing a favor for somebody, but there will be follow-up. There will be that time where they say, hey, I need a copy of my return, and you're, on the beach somewhere, or you're at a conference, so, or you're on a flight. So, make sure that they are the right fit clients before you let them in, because then you're going to look like the bad person when you have to say, hey, you know what, I can't help you anymore. Forget the fact that I helped you in that situation, get last year, whatever. People forget about that stuff. They just want you to, they want to work with you the way that they want to work with you. And if you're designing your firm to operate the way that you want it to work, you have to set those boundaries. You have to say, that word, that 2-letter word, you have to say no. So just in closing out this one, saying no to say yes. Here's our big takeaway. Saying no to the wrong people gives you the space to say yes to the right ones. That's how you build a high trust, high retention, high revenue firm that doesn't feel like a favor service. So if you want to see how I structure all of this, again, the pricing, the onboarding, automation, the client qualification tools, join the 3-day challenge. Link is in the show notes. Let's build the roster of clients you actually want. Let's design the firm that you want to have, that you're proud of. Until next time, keep scaling smart.